Surprise! Yes, I know you are shocked to see me here. I had said that more than likely I was not going to be doing a Markets a Look Ahead segment today. I explained to you that I was really busy, but look, I won't let you down, and that's why I'm here. Anyway, let's get this done here, people. Let's look ahead. What's going on? And what can we expect here in the ultimate freak show in the history of the world? I don't know another way to put that either. So look, you know how this works. Before we look forward, we got to look back. You got to look back just a little bit to try to gauge, what's going on here. And again, nothing here makes sense. We got an economy that is contracting at its fastest pace ever on record as a percentage of GDP. It's an incredible situation. Our debt to GDP ratio, it just doesn't stop. And there's going to be no end in sight here. No surprise. What else would you expect when you have a deliberate shutdown of the economy? Okay. A deliberate elimination of small businesses here in the United States on a scale that we have never seen before, that way surpasses anything we saw during the Great Depression. But again, it's all a mechanism here to bring about a new government system here in the United States, a new world order. And all of you are well aware of this kind of situation if you've been following this blog here. And this mechanism is fostering that two-tier society I warned would come from over a decade ago. Extreme haves, extreme have-nots. That is going to progress further as we move forward here. So no surprise to you. Actually, nothing that you are seeing right now should be even the slightest surprise to you if you've followed this blog for any length of time. I foretold everything that we are seeing here. I told you to expect things you cannot believe and things that we couldn't even dream about moving forward. Well, need I say more? Look around you here. And the bad economic news that we continue to get every single week after week, year after year, is going to continue. And the stock market will continue higher as long as this mechanism stays in place. The disconnect, you know this, between the stock market and the economy, that gap, this exact motion I've showed you for years, is going to continue as well. And we just got to keep ourselves in the right spots. That's really what this comes down to. And that's exactly what we're going to keep doing here. So understanding, again, last week, round after round of more bad economic news and what happened to the stock market. Not only did we recover a substantial sell-off, a one-day sell-off in this market, we recovered and then some. Cash seems to be making its way into the stock market, coming out of other assets just to participate in this engineered Federal Reserve induced hyper rally in the stock market. It's not going to stop. It's not going to stop, as I said, as long as several dynamics remain in place. The debt market hyper bubble is number one. Okay, and that is not going to stop. No amount of tapering from the Federal Reserve is going to stop the debt market hyper bubble from getting even larger. Okay, what is the job of the Federal Reserve? Well, it is to inflate and to continue inflate on an epic scale, to buy assets, to keep rates suppressed, to keep the dollar weak in this environment, to foster a wealth transfer from one group of people to another. How many times have you heard me explain to you? The well-off, the rich, the super rich, this is the golden age for these kinds of people. For everybody else, not so good. And again, it's the distractions, just the look here, just the don't look here. Don't pay attention to the man behind the curtain nonsense here. The brainwashing from the mainstream media. trying to keep people off balance. The Federal Reserve itself, oh, we're going to taper. Oh, we're not going to taper. Oh, we're going to taper. Oh, we're not going to taper. I mean, come on. Come on, people. This is a shit show, and you all know that. So again, looking back at last week here, yeah, we had a big sell-off in the market one day, and there was so much panic. People writing to me, Greg, I've sold all my stocks. I'm getting out of the market. You're dead wrong. Well, not only did we recover from that by the end of the week, but we're up several hundred points with regard to the Dow. Stop it, people. Stop panicking and just stay relaxed. Okay? Period. The end. So with that said, what can we expect here moving forward this week? As long as the four dynamics of this market remain in place, interest rate suppression by the Federal Reserve for as far as the eye can see. Okay, they're going to continue to purchase assets on an insane scale. So right there is very stock market positive. The Federal Reserve itself, okay, issuing debt through one door, buying it back through another door. This is a deliberate inflation creation machine. That's their job. The goal of the central banks is to inflate. And I told you this from many, many years ago. They were going to inflate, and then inflate some more. So we got this issue in the debt market. You got the 10-year yield. I explained to you, you must watch. It's getting a lot of attention here on the mainstream channels. No surprise to you. I told all of you that I kind of expected this to happen last week, where I said the 10-year yield I expected maybe would break out of its range or push up against its range. Well, we are now probably outside of its recent range that we've been stuck in here. But I also explained to you something which is really big, people. And don't make light of it. There's a lot of people out here that just brain dead. They don't understand basic math. They don't understand basic things. I told you a little formula that you need to look at here. You take the Dixie or the dollar index. You multiply that by the 10-year yield. You divide that by another derivative, which comes out to be 1.61, and then you come up with a number. Okay, that number today really is a risk gauge. Okay, I called it the X factor, but it's a way that you and I can measure risk in this market. Right now, that number that we derive from that little equation is telling us the market remains risk on, and it's clear that it should be clear to you that's exactly what's going on. It's a low number. If you were to look at past, market crashes, this number has been much, much higher, much, much higher, in the hundreds, as a matter of fact. So we're sitting pretty here. What does that mean? Okay, do we need to keep our eye on the 10-year yield? Absolutely, but it's not the number, people, itself that you need to focus on. I explained to you that there's going to be a point where you're going to see a rapid rise in that 10-year yield. We're not seeing that just yet. When I mean a rapid rise, we're at 1.46 or whatever, 1.5, 1.6, 1.7, rapidly rising. Because what that's going to do is put pressure on the stock market when you see that number rising like that. Okay, but again, we got to weigh these things against each other, and then we got to look at the environment we're in. There are a lot of moving parts to this. Trust me, and it's not simple to put all this together in a cohesive way. And a lot of this here is, it's kind of like, it's hard to describe. You got to put this thing together in a kind of a way that makes sense to you, but then there's an art form to this as well. Because look, it's not just like 2 plus 2 plus 2 plus 2. No, you got to look at the current environment and then come up with the most likely outcomes. And I've been doing this for all of you for years. And really, for the most part, I've kept all of you in the right spots here. And we're going to remain there. We got to look for opportunities. We got to, consider what's going on around us. And we got that covered. So this week here, all right, I think it's going to be more of the same. Of course, you're going to get the nonsense back and forth dynamic between the freak show and the Federal Reserve. You're going to hear more about this, about taper. The market doesn't believe it, all right? Although that bump higher here in that 10-year yield, I don't know, maybe that is a little bit of a tell that the market believes the Fed is going to do something soon. But again, it's a token move. If the Fed does decide to taper at all, it's not going to make any difference. Okay? You can't stop what's coming. And I covered this on Friday. People, we're going to get a second wave of inflation. And it's not just Greg Mannarino that's sitting here explaining this here. You got the CEOs of blue chip companies, of other corporations explaining another wave of inflation is coming. This is all by design. Why do you think the Fed still is doing what they are doing? And they're not going to stop. Even if they do taper a little bit, it's not going to be enough to make any difference, nor is it meant to do that. Again, they've opened the floodgates here of inflation. Once that's done, to stop it, can't happen. It cannot happen without melting down the stock market. And I mean literally melt it down. I don't know. Maybe it'll fall 80% if the Fed really were going to get in here. And then again, what does the Fed want to do? They want to buy assets. Do you think this is going to stop them from their end game, from their goal? The final solution here for the Fed is not only to become the lender and buyer of last resort, but to own it all. To own it all, to be the government. And that's who they are now. They're running the entire shit show. You all know that. So what is our job? What is our job, you and me? Okay? Well, to stay on the right side of this entire thing. Not let this sick, twisted thing pull us down with it. It's not going to. Bet against the debt. Become your own central bank. Let them play games. Let them play games. It's JP Morgan. We all know that. The commodities exchange is well aware of it. Let them play their games with the precious metals market. The JP Morgan just got caught yet again, rigging the Treasury market, futures, and options. They're rigging everything, okay? And it's very simple for them to pull the derivative of metals any way they want to. And that's exactly what they're doing here. But to me, I say, good, let them play their game. We're going to play our game. With cryptocurrencies, just took a hit with regard to this nonsense here in China. Oh, it's illegal now. Good. Wait till you see what happens with that. There's no way, in my opinion, and everybody I talk to, that this is not going to affect crypto in the long run. It's not going to. Anything can happen in the short run, whether you're a trader, whether you're an investor, whether you're in anything in life. It's the long run here that matters. And to me, you know how I feel about it. With regard to metals, long-term holds. Cryptos, long-term holds. As a matter of fact, for this market, there's a lot of it you should be holding long too. Large capitalized, large cap companies here that pay dividends, let them pay you to hold the stock. And then you should be trading the market as well. Don't let a freaking one thing get by you. And I won't let that happen. I promise you. All right, people, look, so that's it. We got to keep our eye on a bunch of things. Let's see what happens with that 10-year yield. Watch the dollar, that relationship between the two of those things. I gave you the equation to make it work. Look at that number here. We're somewhere in the 80s. It's a low number. So that means we should be taking on risk. It's really a great measure of risk in the market. As that number stays low, the derivative number that we get, that we derive from multiplying the Dixie by the 10-year yield and then dividing that by 1.61, well, we come up with a nice little number here. And that's going to keep us, I believe, in the right spot with regard to this market. So as long as that number stays low and we don't get a very rapid spike in that 10-year yield, and I'm going to let you know when that happens, just sit back and relax, because this guy here, I got your back. I got your back. And I know you got mine. All right, people, look, so I'm out of here. I hope this video made sense to you. I think you know what to look at. And we will talk in the morning. I hope this was a nice surprise for you. I really didn't think I was going to get a video out today, but here we are. See you in the morning.